Welcome to the Crypto Prism channel. Let's take a look at the latest price action of Bitcoin. From the current 1-hour structure, yesterday's rebound was merely a technical correction. After this wave of decline, not a trend reversal. After finding support around 74,555, price staged a rebound. It precisely bounced to the 0.236 Fibonacci retracement level of the previous decline. Then clear resistance appeared. This shows that the current rebound momentum is mainly coming from short covering, rather than new long positions entering the market. The 0.236 level itself represents a weak rebound, which is easily suppressed. The fact that price stalled at this level actually confirms that the higher time frame is still within a descending channel. From a short-term structural perspective, price has moved away from the lowest point, but it has not formed a higher high. Overall, it is still consolidating at low levels, with weak rebound momentum. Going forward, there are two key levels to watch. The first is the 0.236 level, whether it can be broken with strong volume and held effectively. If price fails to reclaim and hold above it, the rebound will likely evolve into another pullback after consolidation. The second is the 77,000 area below, which serves as the short-term bull-bear dividing line. If this level is lost, it means this rebound has ended, and the market may retest the previous low or even extend further downward. From an overall strategy perspective, it is not advisable to chase longs in the short term. Treat rebounds as corrective moves before the trend reverses. Rebounds are more likely a window for shorts to reposition, rather than the starting point of a medium-term long setup. Now let's look at the 4-hour structure. From the current 4-hour perspective, this rebound can only be classified as a corrective move after a decline. The conditions for a trend reversal have clearly not been met yet. After forming a temporary low around 74,500, price rebounded quickly. However, it is still trading around the 0.236 level of the previous decline, which is around 78,000. This is only an initial rebound zone. If this rebound is to upgrade into a reversal, the first step is to effectively break and hold above 0.236. Otherwise, structurally, it remains a weak bounce. Looking further, the true key level that determines the trend is 0.618, which is around 84,000. This is not only a key Fibonacci retracement level, but also a prior high-volume trading zone and a potential trend reversal area. If price cannot effectively break and hold above 0.618, then all rebounds can only be viewed as continuation patterns within a broader downtrend, only after a strong breakout above 0.618 with volume and continued recovery upward, followed by a firm hold above the 90,000 round number and a successful pullback confirmation. Would the 4-hour time frame have the conditions to build a micro-reversal structure? Before that, structurally, it remains a low-level rally that has not escaped the bearish control zone. The closer price gets to key resistance areas, the more cautious we must be about the risk of a second pullback at this stage. It is more appropriate to wait for structural confirmation rather than preemptively betting on a reversal. Only when key levels are gradually reclaimed and firmly held will the probability of a true trend reversal open up. Now let's take a look at the daily trend. If the previously mentioned micro-reversal conditions fail to materialize, then this rebound is merely a structural correction within a downtrend, not the beginning of a bullish phase. Previously, price formed a bearish wedge structure. The upper boundary of the wedge faced repeated resistance, while the lower boundary support was continuously weakened. Essentially, this was a weak consolidation phase, building pressure within a downtrend. Once price effectively breaks below the lower boundary of the wedge, accompanied by expanding volume, it often signals that the bearish trend has regained control. From a pattern measurement perspective, after a bearish wedge breaks downward, the target is usually estimated based on the equal distance of the prior decline dot from the current structural projection. Once the 74,500 key low is broken and lost, the downside will further open up. The measured move target would point toward the 63,000 to 66,000 region. This zone represents a prior structural demand area and may also become a new battleground for bulls and bears in the medium-term dot in terms of overall rhythm, as long as price cannot reclaim the lower boundary of the wedge and quickly stabilize back inside it. The market remains within a bearish controlled downtrend channel. Rebounds are more likely to be bull traps, and position rotation from a trading perspective, patience is required. Wait for structural confirmation instead of prematurely calling a bottom during weak rebounds. Before the trend truly reverses, Following the structure and the prevailing trend is the most prudent approach on the 6-hour time frame. That's all for today's video. See you tomorrow.